Hello and welcome to Jazz After Dark. How you doing out there? Welcome. Well, hey, by the way, look what my sister-in-law got me for the room here. Huh? It's pretty cool, I thought. Yeah, if you don't know me, I like to fly. I love airplanes. I love everything about them. And like a good whiskey, too, if I'm not lying. And we're going to... well, by the way, thank you, Jen, for getting that for me, if you're watching. We are on our Scottish whiskey tour here with our Jazz After Dark. Those of you that have never seen this before, financial advisors that just hang out in the evening. You know what I mean? Try to teach you something. Tonight I'm going to talk about playing offense versus defense. I want to try to break down the approach to investing or what you might go through as a long-term investor, a trader, whatever, into just a really simple terminology here that hopefully can take some of the emotion out of it. And the Irish, the Irish whiskey we're going to try tonight is 5 to 11 years old. It is J.J. Corey, and this is the Hansen batch number 2. So I don't know if you can see it, but there's a big cake symbol on there for this little service that we have here. Cake and fruit. Yeah, I mean, it smells pretty much like fruit, not so much cake. It's very light, too. Wow. Okay, yeah, that's actually really on the sweet side, I would say. It's made by J.J. Corey. It's called the Hansen Batch Number 2 Irish Whiskey. That's the best of the Irish whiskeys so far that we tried. Two Stacks was the one from the other day. Okay, it was great. So there you go. I don't know if I have a rating for that. Let me think about the rating on that one. J.J. Corey, the Hansen Batch Number 2. It's fine. It's fine. Just a little bit sweet, missing out on some of the spice that I like, but it's probably actually like just really good to just sip. I would say about it's late tonight. It's actually it's 1:15 in the morning. I would say if you're one of those that gets a sweet tooth at like 6 or 7, but you like a good drink, that would be a good one. Okay, let's talk about this. Enough beating around the bush. So I'll ask you this way. With the market where it stands right now, it's June 22nd, right? Do you think, to use the sports analogy, you should be playing offense or defense? Combination of both? I don't know. Where do you stand? See, I envision the market right now with our portfolios, everything that we manage about $300 million here, and we build our own portfolios. We don't actually buy mutual funds, so we have full say over how our funds look. And I'm in a position of what I would say is cautiously defensive here, right? And I'm not saying there's going to be a crash, collapse, anything like that, but the way the markets have moved higher should cause you to at least shift from being offensive to defensive. So think about what's happened here with the markets actually being driven higher by just a handful of stocks. Okay? No problem. That can't continue forever. We'll talk about that on the closing beat. So what is let's do like a couple things you could do to be defensive and a couple things that you would do if you're going to be offensive. Right now, I think the approach is cautiously defensive. We have to be a little bit skeptical about the the way the market has moved higher. We can dissect the market into every little piece and see that we should be skeptical. Also, I would point out, and I did point this out on the closing beat the other day, to have a hedge or to use options as a hedge right now is incredibly cheap. Now, we don't do that. I'm not going to do that in our portfolios. But if you're a investor, trader, managing a portfolio, trading around a portfolio, whatever it is unbelievably inexpensive for you to use options to protect your portfolio. And you can do this from the perspective of just simply buying index puts, very cheap. relative to itself over history. You could work out some kind of collar spread if you want to do it that way. You could participate in more upside, but be a little bit protective on the downside in exchange for some of the upside. So there's not an options lesson, but I'm just saying it's really cheap to do so. So we have the benefit of being able to be a little defensive. We have the skepticism of the way the markets moved higher here. And most recently, we have the Fed that said, you know what, we might need to be a little bit tighter on our policy here. In other words, higher interest rates. So a way that you can become defensive is by taking action and then actually by taking no action. Number one is some form of protection, some form of hedging. And hedging certainly can be, or an acceptable hedging strategy can be just putting a little cash off to the side, not being 100% invested. And you go, well, you can't time the market. I'm not saying that. I'm saying you put some money in cash. Warren Buffett, Ackman, everybody, they all have times where they have just a little bit of money in cash. Slight defensive position. Warren Buffett may be a little more defensive than others, right? So that's one thing. The other thing you can do is say, you know, Dustin, you're not talking to me. I'm a dollar cost averaging, paycheck earning person that when I get paid, money goes into my 401k, TSP, whatever it is. Well, the action you would not take here is to decide, I'm going to save more. Right? Why? We're increasing the percentage we go into our 401k when people are actively wanting to hedge, play defense, and possibly even, like I said, be skeptical of the market rally. So it's not a time you would do that. Increase your portfolio positions or your contribution. How can you be offensive? Because what happens now? If you become skeptical, defensive, whatever, and the market, as it is, kind of is pulling back like that, you say, okay, well, I don't have a belief that the market or economy is just going to fall apart. Every analyst is predicting either a recession in the second half of the year or a slowdown. I agree more with the slowdown. We can kind of see it out there, right? So that would lead to a point in time where you can be more offensive, right? Not offensive, but more offensive. I almost said it that way. So what does that entail? That's when you increase. You say, well, I was only putting 5% in my 401k. Feel good about my job. Everything's good. I'll play catch up a little bit on my retirement. In an effort to not have to save more later, I'll go 6% now. I'll go 7% when there's that opportunity. It's not a one-day thing. You know, you get paid every 2 weeks, every week, every month, whatever it is. You average in at better, more realistic prices to be aggressive at, right? Second thing, offensive positions tend to mean taking that extra risk. If you look at your portfolio, and I don't know, maybe there's software that does this for you. For me, it's clear as day. But if you look at your portfolio and you say, well, last year scared me, you know what I mean? And so I had less exposure to the market. Offensive positioning can be, let me go get a little bit more exposure. Let me be a little more aggressive. I'm interested. AI is interesting to me, but not at these multiples way up here, not at that valuation, but I'll hop on when it gets cheaper. That's playing offense. Large sums of deposits, contributions, sold my house, got some money to put in the market, whatever. Large chunks of money now at that point can be selectively contributed maybe to individual indices, if that's what you like, certain sectors of the market, whatever it is. We can maybe go over that as it happens. So you see, if you know where you stand, and I think you just a simple comment down below to just say defensive or offensive, where do you stand? I think if we were able to measure the results of whatever comments people leave, most of us at this point would say, I'm not doom and gloom. I'm not really worried. I see a slowdown a little bit, so it makes me a little cautious, which is why I say cautiously defensive. I'm not going to make major decisions in the market. I'm not going to make major purchases in the economy right now. Maybe you want to just sit back and wait. Totally acceptable. But by defining that, where's the emotion? The hands aren't shaking. You're not losing sleep. You go, that's my position. That's where I stand, right? It's like politics. We can't talk politics these days, but it's okay if you're independent or Democrat or Republican or whatever other team comes up at some point. It's okay. You can talk about it. That's your position. It's where you stand. I don't hate you. So if you say, Dustin, I am as optimistic as ever about the economy, the market, and yeah, it might slow down, but I'm optimistic, man. I want to be in. I don't hate you for that, but maybe leave a little, like, define that to me. How is it that you can be optimistic? We can debate that, and still be friends, but I wanted to kind of point out my position and help you guys understand the emotion of it goes away when you take a stance, right? You made the decision that that's where you're going to be. Now, the only thing you do from there is if you are cautiously optimistic or defensive or whatever, well, now what's the event or what's the scenario, what's the feeling that you need to have to become more opportunistic or aggressive or whatever? Because you will have that opportunity. And I don't mean just the stock market, right? It could be in the housing market. Maybe you've been wanting to start a business, but the materials that you need just cost too much. And so if there's any kind of, give there on prices, or somehow the industry becomes more attractive and you now find that it's worth it to pay higher prices, whatever it is, when that comes along, what is it that gets you to go, I'm in, let's go. I'd like to be aggressive now, if you can be, right? So just something to think about. I wasn't going to spend a lot of time tonight kind of talking about that, but it occurs to me that when I have had positions in my life, my background was actually managing funds for individuals from China, very wealthy individuals, and they would ask me my position. They were fine with it. It was fine. If you think, Dustin, if you think you're supposed to be aggressive now, they would tell me through translators, but they would say, if you think they're supposed to be aggressive, we're with you. Because the only way they knew that I was wrong is if we lost money, right? So as long as I was making money, they would say, that's fine. We just want to know what you're thinking. Are you aggressive right now? And over time, it became, you're aggressive? Tell us why. We don't know. In our markets in China, we are not aggressive, but you are. Tell us why that is. And so that became sort of the birthplace of why I teach and why we spend so much effort on making these videos. So your stance is important to you, your portfolio, your family, your advisor. If you're working with an advisor who's pulling you this way and you feel strongly about that way, your opinion about that is very much welcome, because they're supposed to listen to you and go, I really think this is best for you. But if you're going to lose sleep if we don't go that way, I'm just going to disregard you, and that's not a good thing. B, we're going to go that way. Or C, we're going to find a way to help you sleep. And that requires work on their part. So hopefully they're doing it. And that's the end of my ramble. I'm going to give this, by the way, if you like, I'm going to preface it by saying, if you like something on the sweeter side, you would probably give this an A+. Nothing wrong with it. But if you like something that's spicier, more mature, I want to say thicker in some way, you're not going to like it. Not worth your money in that case. But otherwise, we don't get anything if you buy this, by the way. But J.J. Corey, the Hanson Batch No. 2 Irish Whiskey. That's what we have. You ever have one of those long days if you're still watching? I had one of those long days. It's been a long week, actually. A shortened, long week. But I'm still up, and I still would like to continue. So I will get out of your way, and I will get back to work. You guys enjoy everything. Thanks for watching tonight. I know it was kind of a ramble, but you guys enjoy, and we'll see you again tomorrow. Adios.